again. So you guys can see my screen. Good shout there, Sash. I didn't completely forgot. Let me know. Okay, cool. Yeah, so I was just saying, like, I'm still treating this as a range, right? Like, nothing's really changed. Like, people were calling, like, for a breakout here, bottom of the bear market, but I just look at this as, like, as another range. So I was looking at, like, 78K for a short, but when we, like, started showing, like, signs of bearishness here, I very quickly shorted, right? Like, my entry price is a little bit higher, but like I alerted the short once we, started like accelerating towards like basically this low here. That's when I decided to short. The proper like entry would have been like, I guess like try like get a closer entry to this anchored VWAP with like my invalidation would have been the high. But anyways, yeah, I'm still in this and it's a half risk, so I don't really plan to trim that anytime soon. This one I will probably take a TP like here, like 68, okay, and I'll probably TP fully that like once we get into this demand here. I was saying earlier, like this for me, this is do or die, because like value area low, you've got golden pocket here as well. You've got this like, ascending like trend line here. So I mean, I think a lot of people, if we get here, like a lot of people would probably be like breakdown shorting, and they could get off guard, right? A lot of people would be bearish at like 66K, but I just see that like as demand. Obviously, I would wait for structure first. I wouldn't leave a limit in. So yeah, that's kind of my thoughts right now. And so the only shorts I'm in is these. What I'm basically thinking is, here we got like a hourly breaker structure, right? If we close back above this point here, this wick high here, this one, like 70.7, like it's like almost basically 70.8K. I'll probably look to hedge long, because then like the scenario would be like that this would be a liquidity sweep here, a liquidity grab, so that would fuel it like price to go higher. I wouldn't close my shorts, so that's why I don't want to close my shorts, so I'll probably, if that does happen, I'll probably hedge long, like maybe half risk. We're still at like sort of range highs, right? A value area high, so I'm not really gonna risk a full R when we're at like range highs. So yeah, but like I won't just like stare at the price and like pray it goes down if it goes back up here. I probably will decide to hedge long, because this will look like a higher low here, and we're probably setting up for another move, but that's not on the cards just yet. I think if we lose this previous day low here, we should be good. Should be good to go. Actually, let me announce my channel as well. I completely forgot to say that I'm live streaming. If you guys got any questions, just pop them in chat as well. I'll also cover today like a bit about like higher time frame ranges, and like basically like before, right, like my strategy was like play like lower time frame ranges using like volume profiles, but I found that like on the high time frame volume profiles are like pretty accurate as well. So right now, right, price is sitting within like this volume profile from 2024. this was technically a downtrend, right? But like, I would still call it like a range or like an area where like, a lot of volume was traded with like not huge amounts of displacement, like to the downside. Like here we like this was all SFPs here at the lows, and at the highs there was no follow through. So I would call that a range personally. And for me, right, if you mark out like the start of impulsive moves of like the range to like the end of it, so like I would say here, those levels like so far have like somewhat like been respected pretty well. So I'm probably gonna keep using like volume profiles on like the higher time frame as well. For example, here I noticed that like the Pico bottom was the value area low. So similarly to back here when we were in this range from like the tariff range here, I would this also had like a pretty good reaction at the value area low. So my idea is, right, like if the same happens where like we lose this so back here we like the second we lost that low here there, it was pretty much like down only, like impulsive moves towards the next area of fair value, right? So this like I remember this, like this didn't give like any good retraces. The only retraces it gave were like 382, like the fib. I'll show you like an example. Like the start of the impulse move, I would pull it from this candle here because this was like this was like the origin of this like massive move down and like the breaker structure. This literally tapped the 382 and it didn't go any higher than that, right? So when you get like start of impulsive moves, you rarely ever get like 618 retraces. If you do, then great, but they're not usually they don't usually happen, at least from like from like if you're looking at like a H4. If you're in a downtrend, right, like the retraces aren't supposed to be that deep, and since we're in a bear market, it makes sense, right? I would say in the bull market, like same thing, like if we're in an uptrend, your retraces to the downside will be not when the impulse, like when the range ends, right, and price ends up breaking out of the range and tries to find new fair value, like you won't get like a clean 618 retrace. Same thing is that like kind of happening in my opinion right now. Like sure, from the lows here, this was like a pretty fat retrace here, but to me, like this is like I'm treating this as a range, right? So if we lose 60k next, I will probably like move down to like the 4 hour, like mark out like a high from whatever high caused like basically the breakdown, or like like the breakdown of like this value area low here, and I will look to like look for short triggers around the 382 retrace, and I'll probably try to catch some nice shorts to like towards at least like this August low of like 2024 here. And in my opinion, guys, like the bear market bottom will be like inside somewhere around this range here that we had. This was like after the ETFs announcement, right? We had this massive impulse up from ETFs getting announced on Bitcoin, and then we ranged here before having another massive impulse up. So this general area here between like 44k and like 40k, I would say I've got this box drawn around here, right? Because if we look back here, the previous cycle we bottomed around the 786, so the same thing could happen this time, right? If we scroll back and look a little bit, right, in my opinion, right, like if FTX crash hadn't, if fucking Sam Bankman-Fried wouldn't have robbed everyone's money, this would have been the bottom here, in my opinion, this 17k. But you could argue like the charts were signaling another move down. So, but this bottom here was created by, FTX crash in November 2022. So same thing, like if something similar happens where, we get some really fucking bad news around the lows, like around, like I'd say sub 50k, like you should be buying spot Bitcoin, not just Bitcoin, like any odds you can get your hands on that you think will do well next ball. For example, like you could just go with majors, right? Ethereum, Solana, or like one that you think will outperform, like Hyperliquid or Tau, whatever. Right now, Tau and Hyperliquid are going pretty insane because I think this cycle, like there's been more like in 2021 there was less altcoins, so like the concentration was spread out, right, between not as like compared to now, right, where we have like 100 million coins, so like in my opinion, like everyone's more like spread out this cycle, so everyone was asking when's the alt season going to start, but things are slightly different now, I think, in my opinion. So you're better off like going with like high conviction alts, for the next cycle, like maybe like 5 or 6, but your main spot back should be Bitcoin. So yeah, other than that, my plan is like to just stay patient. If we start seeing displacement above it, then I will look to hedge long probably. And if we lose these lows, then great. I'll probably take a TP1 of this short from 73, and then also probably like take off this short here, because I think this is a pretty big zone, in my opinion. Like there's quite a lot of confluences like around 66, 65. So I would definitely look for a long trigger around there, whether that's like an SFP, like a sweep of a level, or like a 30-minute breaker structure, whatever it may be. That's what my plan is. But yeah, if you guys got any questions, just pop them in the chat. What was I saying before? Yeah, thank you, man, I appreciate it. So for me, like these higher time frame like volume profiles, I personally wish I started using them sooner. I think it would have like helped my bias higher time frame a lot more. So for example, let's go on the 4 hour. Let's say like you had no idea if this was the top or not, right? At 126k, at 126k Bitcoin, right? Me personally, back in October, I didn't think the top was in, right? I didn't think the top was in until we started consolidating around here. I remember it was, I can go back to the exact date when I thought the top was in. If I could have caught it sooner using like higher time frame volume profiles, right? But look, I'll show you when I go bearish, or like when my bias, like my higher time frame bias, pretty much was like cooked. So I remember seeing this 10-10 wick low here, bottom at 101k, and my bias was, we could still sweep this level, put in like a weekly SFP, and then make new highs. But seeing that like weekly close under there, that was what really got me bearish. But at that point, not like, I'd say like a 50% of the move, more like 40%. I definitely missed out on like some good shorts because I had that like late bias shift, right? But for example, like if I at the time I was if I had like the like high time frame like volume profile marked out, like I would have seen that like multiple times we were deviating, right? Like under this value area low here, right? And basically that 1010 wick, that 1010 liquidation, right? Once we started like accepting below there, that's when I should have been like, you know, looking for like short triggers. So a clean one here would have been like maybe like this H4 SFP, or like losing this after seeing this, right, this rejection here. It wasn't even bullish enough to tap this previous value area high here from the summer of 2025. So seeing that deviation there, right, not even able to tap the value area high, seeing zero displacement at the highs, and seeing like massive follow through, like massive red, red displacement to the downside. That's when I should have been like more so like starting to gear my like bias sooner than I did. I think that was my mistake in my opinion. So keeping that in mind, right, like I've learned from my mistakes and I think I know what I'm gonna do, right, like in reverse. So pretend like, okay, well, this might not work, but assume, right, we're at the bottom, we're like in the 40k range, and there's a candle like this, right? Once we get like a bigger smaller retrace, sort of, actually, you know what, I'll go back to 2022 because that would make slightly more sense. Actually, I can just do this. Hold up. 2022 November. Oh wait, no, I didn't select. I did not select the date. There we go. November 2022. So like, I don't know if there will be any news that will cause a move like this, but like I'd say, like say you're looking, say that you get an aggressive move down, right, into this value area here. No, sorry, not this one, the one after that, this range here. I mean, it's a scuffed range, but it's a range nonetheless because we deviated there. I mean, there was I would still say on the higher time frame this was like consolidation, right? So similarly to back here, if we get like a very aggressive, downwards move into that area, that's when I think like the bottom will be in, and I'll probably start looking for like spot buys. So and that, like, there's a couple other confluences which that obviously it's around the 786. It's also, if it also happens like close to October, then that's like extra confluence because like that would be like almost a year after, right? Every bear market has lasted so far a year, right? So just like I think just over a year. So if the same thing plays out, then that would be pretty interesting, right? So I'd say we're definitely missing a leg here. I definitely don't think the bottom is in just yet. Could we go higher from where we are right now? Yes, but I'm treating this as a range, so that's why I'm short right now. And if this is like similarly to the move that we had at 97k, well then I know what my game plan is, which is like the second we start seeing like displacement down here, I will just look for short triggers on the low time frame, and my first target would be that August low, right? So 48k, and maybe I'll leave a runner towards value area high here, or I've not drawn the value area low here, but the value area low would be at here at 40k, basically 41k. That would be probably like, if you had a short, I would probably close it fully there if I'm honest. Or if you don't want to fully close it, just start buying spot, right? So yeah, those are my thoughts right now. Um, there's also like another scenario where like we range here for a bit longer and we don't get like the impulse move like as like that like as soon as we think. So say for example we start like going below the 65k area, but we reclaim it pretty quickly, then there's like that move would probably look like a fake out to me. And you know, depending on like how structure looks, I would probably look for like another maybe a swing long towards 78 or like 83k. The only thing is like I don't know if we get 83. I'm not so sure about 83 in my opinion. If we get 83, it would be literally it. My initial idea was to get 83, right? But I don't know if they would run the exact same playbook as they would up here, which is like I don't know why I didn't short this. It's just pure. I can tell you why. It was pure greed. I wanted it higher. I wanted closer to this Valerio high, like around like 9900k. But I'll learn from my mistakes. So um, it literally had wicked up into like this golden pocket and the anchored VWAP from all time high. Plus it had tapped like the previous. If I zoom out here a little bit, let me like that range that we had in Q4 2024 to like early January, like right before, right around the time where Trump was inaugurated, and then after like he announced tariffs, and then we lost our range. Like we tapped into that point of control on the previous retrace up. So if we do the exact same thing, like that would line up within the 618. But I just don't know if like our market makers really that fucking like are they really that much of a what's the right word like are they really gonna troll us again with the same pattern, man? Like I don't know. That would be crazy to me if the same exact thing happens as up here. But I mean, it'd be a short for me, right? It'd be a fucking short, 100%. The area before that I'd be looking at would be equal highs within this golden pocket here from that daily, pulled from that daily, right? That daily high there, because like the other one is pulled from this high, right? So it's a bit subjective, right? Whether you which high you choose, but technically that was a retrace. That was the last like daily, like lower time frame daily or like origin that causes like massive impulse down. So that's why I've got like the two golden pockets here, because it could be either like this is the correct one or this one could be the correct one as well. I personally don't know, but up here it was fairly simple because well it was just the high here, right? The previous highs before that never got hit, so that's why I don't have it marked out. But yeah, let's see. Yeah, like so that is like the other scenario is like we range here for a bit longer than expected, between like 60k and whatever, right? Like if we make another move up 78 to 83 whatever, that's where I would be looking for like swing shorts again. Here at 76 I didn't decide to like short here because like I didn't see any. For me, like this was a tap into an imbalance, but like I would have at least liked if you see there, like there's a high there that I would have like at least tagged that, right? But I mean, just the rejection here, I don't know. I guess it was this 0.5 fib. That's the only really like reason I have for why we rejected there. So yeah, um, I'll cover one last thing, which is like auction market theory, which is that like markets are like 70% of the time trending, ranging, and then 30% of the time trending. Jeez, I keep getting confused. So for like 70% of the time, most of the time, right? Markets are prices trying to find their value, right? So markets are an auction between buyers and sellers, and price is always trying to find fair value, right? So that, in my opinion, that this is why volume profiles work so well, is because you can clearly see the visible areas where the most volume is traded within a range. So why is this important? Because it allows you to see where buyers are more likely to step up, and also, in my opinion, like you get the most risk to reward looking for longs, near closer to range lows than you do looking for longs at range highs. Which is why I really hate like wanting to look for a long here, but I am in two shorts and I'm open to there is a possibility I'm wrong about this being a local top here before we hit this, right? But most of the time, if I don't have any shorts and say price was here, I wouldn't touch longs. I would wait for price to at least get back under value area low, or the best our risk to reward would be like closer to 60k region. But yeah, anyways, back to auction market theory, right? So markets, I'll quickly write up a text. So if 70% there, I keep messing that up. 70% ranging, hold up. What does this mean, right? So if 70% times they're ranging, oh my God, what am I doing? It's because I keep thinking about this range we're in. I can't, there's no really impulse moves just yet. So most of the time we're going to be in a range. So in my opinion, people who top blast or bottom blast, like for example, top blast longs at range highs or bottom blast shorts at range lows, the breakout traders or like the breakdown traders, they're the ones who are going to get fucked most of the time, simply because price is most likely to deviate right around value area lows or value area highs until, of course, the auction is successful, and whether that auction is successful to buyers or sellers, whichever direction that move occurs, that's when you want to be like half retarded, like semi bottom blasting, right? Because the trend is going to be much more stronger. Retrace is going to be very tiny. For example, like this move here, this was an impulsive move after losing that value area low here, clearly, right? So if price is going to impulsively move down, they're not going to give everyone 618 retraces to get like short into, right? They're gonna probably at most tap maybe 0.5 fib, maybe 382. For example, here, look, that wick low there bounced 382 and then nuked again. That's what I will be looking for personally if we start like accepting below here. I'll look for like retraces into the 382, look for a short trigger on like the 30 minutes or the 15, whatever, and then targets would be 49 all the way down to like that previous value area low. I don't know why I don't have it drawn, but it's like somewhere here. It's like at 41, right? So yeah, that's kind of my game plan for now. The opposite would you would do the opposite, right, of the shorts in a bull market. So in a bull market, you would become semi-retarded once we start accepting above the range. So this was a scuffed range. It wasn't super clear, but the point is, like, we spent quite a lot of time consolidating here between 90s to all the way down to like 77, 70, 74 here. Couple the fact that like you can also use like candle structure. So for example, I believe uh, we're not on the daily right now, but the daily MSB was here. Once we broke above that high, even though we weren't above, range highs just yet, you can see like we had deviated, like from like below. We deviated from value area low here, but we reclaimed it. It wasn't a clean reclaim, but you can see here, once price got basically back above value area high, closer to up here, this was pretty much like up only, didn't give like one single like good 618 retrace. Maybe here, you could consider this a range as well, but like if we're talking about like the higher time frame move, there was no like big easy retrace to get long into once the impulsive move started, right? Here is when we actually started, like, this was another range for me here. So this was impulsive move, ranging, impulsive, range. So you can clearly see, like, for most of the time, markets are ranging 70% of the time, in my opinion, and the rest of the time they're trending, and that trending move is the most impulsive. So it will be the shortest and the most aggressive, right? So that's why, in my opinion, it's minus EV to be like one of those guys who always looks for breakout longs or like breakdown shorts, because especially breakout longs in a fucking bear market, that you're gonna get destroyed most of the time. So keep that in mind. Like the conditions, you couple like that like auction market theory with like obviously other confluences, right? Like whether we're in the premium or discount of the range, where's like the Fibonacci levels, where is the supply and demand, that's all going to be used in confluence with like higher time frame, like the previous ranges of high time frame, like volume profiles. So yeah. So for example, for this range, I think this is still an auction between buyers and sellers. This to me looks like a failed auction currently, which is why I'm heavily short, and I will TP like around the 50% of this range, and that's where, if there's going to be a leg up, I think it's going to be in this zone, like I said before. If not, then we probably nuke. We'll see. I mean, we could also bottom, here at the 2024 range point of control, or bottom, again here at the value area low. We could technically sweep that, then go up. We'll see. I don't know the future, but my idea isn't to like predict what price will do. It's what, like, my job as a trader is to react to whatever price is showing me, right? So yeah, does that make sense? Sash, I don't know if you kind of understand that, or if it's like complicated. Yes, let's see how it goes. Yeah, 100%, man. So I've seen some people on Twitter say, like, let's see. So I've seen some people on Twitter say, this was the higher low that led to this move up, and we SFP'd that. So they're saying the bottom is in, and we're gonna go to 80k next. In my opinion, I don't think this is the correct higher low. Even though it's not super visible, I would say this is the higher low, because this move happened, right? We got an impulsive move up, but we still got the retrace, right? This was still a retrace. So this low here led to that move high, that move up higher, this low here. So this, for me, is the breaker structure on the 12-hour and on the 4-hour, right? So, my bias is lower. Like, people saying this is the higher low structure here. First of all, if you go on the 4-hour, it's obviously not, in my opinion. It's we had this move up, retrace, move up, and then now we're like, this is like, in my opinion, the lower low, the lower low. And if this is the start of an impulsive move, like I said before, guys, we shouldn't see deep retraces. So 382, that's where I shorted. Well, I shorted closer to like value area high here, right below this H1 EMA 200. And yeah, if we make this as well, no, wait. Actually, no, yeah, I'll do this. This like anchored VWAP as well. I think it's a nice confluence. The idea is like on impulsive moves, whenever price trades into this like anchored like VWAP, you look for shorts, right? Because the idea is like this is like a trailing. It's like a way to see like, you know, prices in like premium here, and if it's below it, it's like aggressively downtrending. So for example, I'll quickly draw one from the Pico top that we had in January. If we draw a anchored VWAP here, you can see here like it respected quite nicely, right? Price was like aggressively trending under it, right? So the idea is to like look for short triggers, you know, in the bottom of the anchored VWAP range, right? So here, look, anytime like price gets close to it or even above it, I guess, right? Here was like consolidating above it. Here it Pico tagged. Here I wouldn't really call this is not as close, but this one was, I would say that could count, right? It was pretty close. So yeah, and then I mean the next time we basically lost it. The second we lost it here at the end of the January, we hadn't tapped it all the way till here. So once price got to here, that was like you know, a sign that like this downtrend here was like losing aggressiveness. So yeah, that's when like, you know, you would like draw a range from like, so draw it from here to like whatever high created like the first like major pullback. I've drawn it from this high here because, well, the reason why is because like this high here ended up leading to like, you know, a pretty steep move down. Even though this wasn't the top, this was the top here, I would say that this candle, this was just a wick up, it was just a SFP. It wasn't a candle body above or anything like that. So this, like, I sometimes look at like candle wicks as like, you know, not really like you know, what would you say, like I guess acceptance, or I wouldn't use this high usually as a top of a range. More so I would look at this as a sweep of range high, right? So yeah, I remember shorting this in an elite, and it eventually hit TP, but fucking hell, this was pretty rough. And this was a short idea I gave in elite. I remember now. So yeah, this I round trip pretty hard, but I should have been less greedy, and I should have just TP'd here at this like 50% here. But yeah. Also, another confluence would be looking for a long here would be like if you look on the TPO on like MMT, market terminal, there's like we left a single print here at the bottom, literally below this wick here at 68.8k. So that's probably where I'll take a TP1 on this short here. This is like a do or die zone, like I said, you know. So if it bounces from there, you know, I look to hedge long for sure. And if we lose it, then shit. Like, I mean, there's a good scenario like that was the top. That was the local top before going lower. And yeah. So, you know, in bear markets, right, when you're in a range, usually once you've topped out, like whenever price ranges, usually sellers are gonna win that auction, right? If you're in a bull market and then price starts like consolidating and ranging, um, bulls are most likely to win the auction. So price will trend to the upside, right? Cause the impulsive move before we range again, and then you know. So yeah, bit of a messy chart, I know. I should probably just like clean, like make a cleaner layout, and just with like the volume profiles drawn out. The only thing is like I'm using, for example, say you drew the volume profile on like Bybit, it would be slightly different. It'd be more so the same, but it'd be completely different, right? And if you were to draw it on spot, I don't even think it'd be accurate at all, because you're looking for like more so, I'd say you're looking for like buyers. You're looking to see where like who's in control, right? Buyers or sellers. And in my opinion, if we're all trading perps, we should be looking at the perps prices, not spot prices, right? You can look at spot volume and CVD and like delta on like an actual order flow platform like CoinGlass or Key Attacker or Market Monkey Terminal. So yeah, and the data on there is probably a lot more reliable than TradingView. But yeah, that's Bitcoin. Let's go over USD dominance real quick. If you got any altcoins, let me know. So beautifully, right? This dominance chart is like it's it's almost like in hindsight it's really clean, but